Okay, so we're going to cover something very important today that you need to know if you're trading the markets. One simple adjustment to 7 times more profit. Now, before we begin, just a quick disclaimer. Bear in mind that all comments I made during this webinar are for educational purposes only. You all know there's a high degree of risk involved in all types of trading, and we assume no responsibility for your trading and investment results. Focus, turn off distractions. I know it's very difficult to do that in this day and age. We're pulled from pillar to post with so many different things going on, but you'll get the most out of this webinar if you focus 100% on what I'm going to share with you, and it may be a game changer for you, as it was for many people that have heard this for the first time. I gave this a couple of weeks ago. So I'm just going to see who I have on the webinar. I'm just going to put out the chat. 1 second. Maybe it's the questions. Okay. Right, so now I can see. Okay, so whoever hasn't heard me speak before, just type a hello in the chat area, in the questions area, so I can see who you are. And if you have, just say yes. And while you're doing that, Renee already went over my background, but just to tell you, for those of you who are here for the first time, about TradeSmart, we are a trading education business that focuses primarily on teaching you how to read the market professionally, how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. This is what we're going to cover. We're going to go through the trading framework that you need to have in place. And if you don't have this in place, you will not become a successful trader. The process you need to go through. And then we're going to go over, how do you find your biggest trading demon? What is it that's holding you back? How do you find that? And how do you eliminate it? Prepare to be shocked. And we're going to go over a small adjustment that you can make to your trading that may potentially give you 7 times more profit. We'll go over the three steps you need to follow in order to become a successful trader, and then I'll open up to audience questions and answers. Now, quickly, the trading framework. In order to become a successful trader, you need to run your trading as a business, and that involves having a framework in place in which you operate. You need to have a trading plan. And within that plan, you need to have money management rules, risk management rules, and you also have to have trading strategies. Now, I'm not going over exactly everything that needs to be in a trading plan, but those are some of the things that you need to have in a trading plan. The next thing you need to have in this framework is a trading log. You need to log all your trades. Your broker log is not good enough. You need to log your own trades. Your broker doesn't know what strategy you're trading, and you can't see certain things in the broker reports that you can actually track in your own log. You need to have a tab on yourself as a trader, on your results, on what's working and what's not, and what you need to do to improve. You need to log your trades in your own personalized trading log. And finally, another very important part of this framework is to have a trading journal. You need to journal your trades, not just your trades. You need to journal yourself, what you're thinking, what you're feeling, and what you're doing as you go through the trading day. And that's very important, because if you make mistakes, you want to find out what the mistake is or was and what caused it. So if you, for example, get out of a trade too soon before it hits your target, and then you watch the trade on the sidelines get to your target, and that's frustrating. If you track what you're doing as you're doing it, for example, that you feel afraid that you're going to lose the profit that you have, and therefore you're closing the trade out, then you know exactly what's causing that action in the market that's detrimental to your bottom line, because you're not letting your winning trades run to their target, and you can track how many times you do that and what effect that has on your P&L, on your profit and loss. Now, once you have this framework in place, there's a process you need to go through so that you're organized and you're running your trading as a business. And here's what this process is. It involves routines. You need to have routines that you go through step by step on a day-by-day basis. You need to go through a preparation time. You need to prepare to trade. You need to ask yourself two questions before you trade. The first question you need to ask yourself is, am I ready to trade? The next question you need to ask yourself is the market ready? So am I ready, and is the market showing me my edge? If either of those aren't in play, and you can't answer yes to both of them, then do not trade. You can be ready to trade, but the market's not showing you any opportunity according to your trading plan, nothing to do. Or the market could be great, showing you wonderful opportunity, but you have like 3 minutes before you have to run out to a meeting, for example. That's not how you should trade. So you need to be prepared. You need to be, preparation equals confidence. If you're prepared, you can be confident when you trade, and that will taper the emotions that many people have and the emotional errors that many people make when they're trading. And you need to have patience. You need to be able to wait for the market to show your edge and do nothing in the meantime. I had some great feedback from the trading. We have a live trading room that we run every day. And one of the feedbacks I got from one of the people who was in the trading room for some time said that one of the main things that she learned from the trading room was you don't have to be in a trade. A lot of beginning traders feel like they have to be in a trade. Not being in a trade is also trading. You're taking a position. You decide that there's nothing to do, so I'm not doing. Now, how many of you out there, you can type a yes in the chat area, in the questions area, how many of you wished that you wouldn't do many of the trades that you do? And if you were to eliminate those trades, you'd probably be doing okay, but you can't seem to get yourself to not do those trades. So just type it in the chat area so I know. Hi, Mark, by the way. It's great that you're here. Hi, David. Hi, Mike. Okay. And the next thing that you need to have is discipline. Now, what is discipline? I have many people that come to me for coaching. And one of the first questions I ask them is, do you have discipline? And most people think they have discipline. And many people don't even know what discipline is. So the definition of discipline is the ability to follow a plan, the ability to follow a set of rules. So in trading, discipline is defined as the ability to follow your trading plan. So if you do not have a trading plan, you cannot be disciplined because there's nothing to follow. So most people that are trading without a trading plan. So by definition, they are not disciplined. And the ones that do have a trading plan find it very difficult to follow their trading plan. That's also a lack of discipline. And I think a lot of the problem may be due to the fact that they do not trust their trading plan. And they don't have a higher level of confidence in what they're doing or in themselves. They haven't proven it works. If you can prove to yourself that what you're doing works and you have a positive expectancy and you will make money over time, not on one particular trade, but over a large enough number of trades, then you'll have confidence to take the trade. For example, you can have a system that is right 1% of the time. For example, you have a salesman or saleswoman that has to make 100 phone calls to make one sale. That's a system that fails 99% of the time, but that 1 out of 100 calls that the salesman makes will make a $100,000 sale. So ask yourself, is it worth going through those 100 or the 99 rejections or no's in order to get the 100,000 sale? Of course it is. So here you have a system that is wrong the majority of the time, 99% of the time, but yet you're making money with it. So it's an interesting thing about trading. This is what I was discussing with one of my coaching clients today. Trading is a business where when you're trading, you must not think about money. You must be focused on the process of trading, finding good trades, executing your trading plan, managing your trades, and everything else that goes into the process. But you also have to be conscious of the money, but not when you're trading. So trading is not about being right or wrong. It's all about making money. And the proof is what I just mentioned before. You can be wrong 99% of the time and still be making money and still be profitable. So there's systems that you may see out there on the internet advertising. Here's a system, batting average, 90%, 80% of the time right. But guess what? It's losing you money because 20% of the time it's losing more money than it's making the 80% of the time. So in order to evaluate a system, you need to have two numbers. You need to know what the batting average is, what the percentage of winning trades, but you also need to know what the average winner is to the average loser. Without that information, you cannot evaluate a system, and find out whether it's going to be positive or you're going to make money with that system, or it will have a positive expectancy over time. So that's a brief introduction. We also need to have your psychology and emotions in place. And if you have confidence again in what you're doing and you understand the mechanics of how the market works and you're able to read the market well, then you should be able to trade with not many emotional issues. When I trade nowadays, very difficult, very different to how I traded when I first started. I don't feel the same kind of emotions that I felt when I first started trading. I'm like relaxed when I'm in a winning trade and when I'm in a losing trade and when I'm looking for a trade. But when I first began, it was kind of nerve-wracking, and I'm sure most of you find trading like that, but it shouldn't be like that, and it's not sustainable like that. You also have to have a way of measuring your progress. At the beginning, when you're learning how to trade, you're probably not making money, you're probably losing money. But if you can measure your progress and know that you're going forward step by step and getting closer to your goal, then you can feel a sense of satisfaction that you're moving forward, that you have a way of measuring your progress, that you're actually progressing, you're going in the right direction, you're getting closer to where you need to be. Very important. So let me share with you a trading process example. This is what you could do on a day-by-day basis. First of all, prepare yourself to trade. Then analyze the markets that you trade with a view to finding trading opportunities. Wait for the market to show you a trading opportunity in your trading plan. Take the trade. Take a picture of the trade entry. Write an entry on trading journal. Manage the trade according to your trading plan. Take a picture after the trade is completed so you know what your entry is, what it looked like, and then what the market looked like when you exited the trade, but also take a picture of what happened next. And that way you'll know if you got out at a good price or if you did the right thing. For example, if you enter at a certain price and you take a picture of the entry and then a picture of the exit, and then you see the market carries on much beyond where you got out, then maybe you need to adjust the way you left a lot of money on the table. Maybe you need to adjust the way that you take that trade or manage that trade. Maybe it's worth trailing behind it and letting it run. And then enter the trade in your trading log so you have a record of that. And then write an entry in your trading journal. Is everyone following so far? So that's the introduction, just to give you the framework in which you need to run your trading business. Now, how do you find your biggest trading demon? Now, I like this picture because it's like kind of these demons are speaking to you. It's like they're sitting on your shoulders telling you, take that trade. You know you shouldn't, but you're doing it, yeah? Get out of the trade. No, you're going to make that money back on the next trade. You lost on this one. Let's take a bigger size now. We can make it back on the next one. Not the right thing to do. You're spiraling out of control. You're not following your plan. It may work now, but one time it's going to hurt you, it's going to harm you, you may wipe your account out. And I'm sure many of you that have been trading for some time have gone through this sort of emotional roller coaster ride when you're trading. Again, if you think about it, that's not the way you should be doing it. It's not sustainable, it's not healthy for you to do that. You don't want to be in an emotional turmoil when you're trading, and every trade is a life and death situation. Remember, it's one trade out of many that you will do, and any particular trade may be a winner and may be a loser. You don't know whether the next trade is going to be a winner or a loser. It could be the best looking trade in the world and it doesn't work. It could be not a great looking trade and that goes on to be a winner. You have no idea. It's not something that you can know when you take the trade. we operate as traders in an unknown. We don't know what the results. We don't know what the results of any one particular trade. But what we do know is, if you have a positive expectancy and an edge, you do know over a large enough sample, a large enough number of trades, you will come out on top if you have a positive expectancy. So how do you find your biggest trading demon? Well, you need to actually have a way of logging your trades first and journaling what you're doing. So what you need to do is you need to use a trading log and log all your trades, stage one. Then what you need to do is log each mistake you make. Yeah, by every trade, you can have a number of mistakes. You got in too soon, you got out too soon, you didn't position size correctly, you lost too much. Whatever it may be, you hit the wrong button and you sold instead of bought. I've done that a few times. It happens maybe once a year. I buy instead of I sell. And what I usually do in that case is I just immediately close the trade. What you need to do now is log how much money that mistake cost you. So what you can do now is look at the end of each month. You're going to know what your number one error is, how many times. You're going to know how many times you made a certain error. But you'll also know what your biggest losing error is. As in, you might make a certain error many times, but that might be not the one that's costing you the most. So you want to know how much your biggest error is costing you. You want to focus on the error that's costing you the most, that's causing your P&L to be, to be negative or to be less positive. What error is causing you to lose the most money, basically? And then what you need to do is focus on that error until you fix it. Don't try and do too many things at once. Fix one error at a time, and then you'll be in a much better place with your trading. So first, until you can fix an error, you must know exactly what that error is. Okay, so it's very, very important to track your trades and track yourself so you know what your error is. Once you know what the problem is, that's half the problem. Then you can figure out how to correct it. And again, trading is one of those jobs, one of those professions where most people lose their way to success. You make every mistake in the book until you don't make them anymore, and you eliminate one at a time until you're left with doing the right thing. So remember, there's only 4 outcomes to any trade that you take. There could be a big win. That's great. You can have a big winning trade. There could be a big loss, a small win, and a small loss. Now, so long as you eliminate this one, the big loss, you're okay. That's what most people need to focus on at the beginning. Now, prepare to be shocked. Most people's biggest trading demon is not cutting their losses at 1R. 1R is a risk unit, is a dollar risk amount that you risk per trade. You want to keep your dollar amount per trade constant. It makes no sense risking $10 on a trade and making 10 times your risk, $100, and then risking $1,000 on a trade and losing it. So you're basically up 9R, 9 times your risk, but you're down because you risked more money on one trade than you did on the other. Ask yourself a question. What would happen if you cut your losses at 1R? As in, you cut your losses at whatever that dollar risk amount is per trade. Now, let me show you a result of one of my traders. And you can see this is a result from 350 trades, letting the losers run. You can see that this trade is profitable. Batting average is 56%, but you can see here the average winner is smaller than the average loser. There could be 2 reasons for that, or one of 2 reasons. One, there could be some massive losing trades, or you're not letting your winning trades get to their target. Either you're having some big losing trades, which knocks that ratio down, or you're not letting the winning trades run. Now, let me show you what would happen to these results if this trader was risking $25 per trade. So this is 1 month of trading, and actually 1 week of trading, 350 trades in 1 week. It's 1 week or 1 month? I think it's 1 week. This trade is up just over 4R, 4 times their risk. They're risking $25 on trade. But if we went through the trades and we basically cut every trade that was beyond that $25 loss, because that's their R value. So if it was $100, we moved it down to 25. If it was 30, we moved it down to 25. Anything above 25, we was a minus 25 loss. We cut every single trade that was above $25, and this is what the results were. This trade is now making $806. Notice the batting average is the same. And just so you can see them both together, this is results from 350 trades. If you let your losers run, you're profitable. And your expectancy here is 32 cents per trade. But if you cut your losses at $25, your expectancy goes up to $2.30 per trade, and you're now 7 times more profitable than you were. What did you do? You just cut your losses. Everything else is the same. You didn't let your losing trades run beyond 1R loss, beyond the $25. And you're currently positive 7 times more than you were if you didn't do that. Anyone shocked? Okay, let me show you another example. Here's another example. Again, another week or month. Let the losers run beyond $25. This trade is down $665. 50% batting average just over. And the win-loss size ratio means their winning trades are smaller than their losing trades on average. If you let your losers run, this is a losing month. It's a month. But if you cut your losers at $25, look what happens to the P&L. You're now profitable by almost the same amount as what you're negative. You now have a positive month. One little change can make all the difference. Are you making this error? Type a yes, type a 1 in the room if you're making this error. If you think that you're making this error and you need help with this. Or type yes or no or whatever. If you don't think you are, then that's fine. Great. Then you're already further on. Okay, thanks, Mark. Right. So what we're going to go over now is how to survive the learning curve. Now, again, everyone who starts out trading, it takes time. Thanks, Chris and Summit. How do you survive the learning curve? How do you make sure that you're kind of intact at the end when you finally become a successful trader? Or how do you last out the learning curve? What do you need to do? Well, the main thing that you need to do is cut your losses at 1R. That's what we just went over. Very important. If that's the only thing that you do from now on, and you're already one step beyond many people that are, trying to trade and make money. They're focusing on the money, and they're taking too big a risk sizes, losing too much, and with the hope that the next trade is going to make back what they lost on the previous. That's gambling mindset. So here's an action plan that you can use in order to help you become successful. First thing you need to do is log your trades in a trading log. Cut your losses, your losing trades, to 1R. Yeah, go through your trading log if you've got a trading log, or pull them out from your broker. Go through every single trade that you did and cut your losses to 1R. Compare the results of cutting your losses to 1R compared to what you've got now. Are you now profitable? So I want you to do that. Do it immediately after this webinar, or at the end of the webinar series. And you can email me your findings to simon@tradesmartforex.com. I'm very happy to see and discuss with you if you're willing to put in a little bit of work. It should take you no more than about 10 minutes to do it. Go over 1 month's trading or 2 months trading, or however much you want. Go through your trades and make every single losing trade beyond 1R a 1R loss, and see what the bottom line is. Are you willing to do that? If you're not yet a successful trader and you're not willing to do that, you will not become a successful trader. I can say that quite clearly. If you are willing to put the work in, then you'll get closer to the results that you want. Successful people in life generally do things that most unsuccessful people are unwilling to do. Okay, very important point. They do the things that most people don't want to do. They do them anyway, and that's where they become successful. So this is one of the things, I know it's a little bit of a job, that will make all the difference. It may be shocking to you, the results. So I'm very interested to hear your results. If you're willing to put the work in, I'm willing to have a look at your results. So what are the 3 steps you need to go through in order to become successful? We've covered the first one. The first one is keep your losses small. This is one of the biggest issues, the biggest errors that most beginning traders and some even traders that are more advanced are still making. But another big issue is this: eliminate trades that are not in your trading plan. You must not take trades that are not in your trading plan. You can't just go and do what you like. You must have a plan. You must stick to that plan. And again, if you would go through your trades and eliminate trades that aren't in your trading plan and compare that to the results that you have now, you may be very pleasantly surprised or shockingly surprised that you may actually be a positive trader if you wouldn't have taken the trades not in your plan. And the final thing that you need to work on is let your winning trades get to their targets. How many of you cut those winning trades too soon because you're scared of losing the profit that you have on the trade? You're not able to sit through a pullback because guess what? Most trades or most things that you trade don't move in straight lines. If it's going up, it's going to go down and then go up again. It doesn't go in, most things don't go in straight lines. So if you imagine a train moving to the upside and then it pulls back to the downside. So if you're a scared trader, yeah, and you're thinking about money, then as soon as it starts to, you see a bit of red and it goes against you, you're going to pull the plug and get out of the trade. If you're a confident trader who understands that's just a pullback, you may be looking to get in a bigger position on the pullback. You want to add to your trade. You see the difference? 2 traders, same market. One makes a lot of money, the other one makes a little. One adds to the trade, one jumps out because he's scared or she's scared. So far, so good. So these are that's your demon, David. So I'm happy to help you with that. If you drop me an email, I'll be happy to speak to you. We can, So 3 things you need to do. And again, these are the 3 pillars that you need to, to become a successful trader. Keep your losses small, as in cut your losses. Be disciplined. Don't take trades that aren't in your trading plan, and let your winnings run. Everyone's heard that in probably those terms, but this is really what it is. Now, what I want to do now is share with you how you can kind of take the next step. So now that you understand how you can improve your trading results and what you need to do, you can take it a step further and you can join our weekly preparation session. Now, let me just share with you what people are saying about this session. Simon then goes through all the markets he follows, sets supply and demand zones, and gives his opinion on the market direction. So it's well worth the money if you want to follow the markets and get good trades. It's worth more than the trading rooms where you just follow trades blindly, and it's helped me a lot. And it's from Jane. I really learned a lot from listening to what both you and Mike had to say. The whole atmosphere in the sessions is so friendly. Both you and Mike go through all the charts very clearly and point out any possible current or upcoming trades for both the whole week and day trades, some of which I took and they were successful. Most important though is you thoroughly explain how to use the different levels of supply and demand and point them out very clearly. I can highly recommend the trading room to anyone who is really interested and wants to succeed in trading. So let me share with you what most traders do. They do this. They spend 100% of their time trading. They don't do any preparation. They don't ever follow up and review their trades. And what does that generally result in? Fear. Hopium. Hope is not a good word to use. You never want to be in hope mode when you're sitting there at the edge of your seat, beads of sweat running off your forehead, your heart's pounding, and you're hoping that this trade's not going to lose your money again. And it does, and that results in frustration and ultimately failure. That's not the way to succeed. What do pro traders do? Well, they spend a third of their time trading, a third of their time preparing to trade, and around a third of their time following up and reviewing their trades so that they can make adjustments to their trading plans, so they know what they need to work on, so they can constantly improve. And what does that result in? That results in confidence because you're prepared, consistency, and a high probability of success. And as we've said this already before, preparation equals confidence. How many times, I mean, if you go back in time to when you were in university or in school and you had to take an exam and you turned up to the exam, you're standing outside the door, they haven't let you in yet, and you speak to a few other people and you're not really prepared. You haven't really learned the material well enough and you're pretty nervous. Someone mentions a question and you don't know what they're talking about and you get very nervous and you walk into that exam nervous, not confident. Compare that to where you're completely prepared for the exam. There's no question that they can ask you that you're not prepared for, and you walk in and you hear people chitter chatter beforehand. It doesn't concern you. You go in there because you know the material and you're ready to take that exam and you're ready to pass. That's confidence. That's how you need to trade. You can't come to the market unprepared and just, wing it. It's not going to work in the long term. You might get lucky and have a few winning trades and think you're king of the market. And then you'll have probably a big losing trade that will knock you out. And then you'll get onto that kind of emotional roller coaster ride that's very similar to gambling. That's not how professional traders trade. So let me share with you what you get in this session. Yeah. Now, you're going to get access to the membership site. Now, let me share with you this preparation session that I do on a weekly basis. Used to take me 4 hours to do this analysis when I first started. I've now got it down to an hour and sometimes less than an hour. So if you were to try to do this alone, it would take you even longer. I know many people that are going through using the weekly preparation session to actually help them. May take them 4, 5, 6 hours to actually do it, but they're getting results. I had one person come back to me last week and telling me he made, on a very small account, is in England, £650 in 1 week of trading just following the session. He goes and he marks out the zones on his charts, and then he goes and compares it to the supply demand zones I mark out, and he learns from it. He uses it to learn where to put the zones, and then he trades off them during the week, and they work for him. So you can compare your analysis to mine and see what works in real time. Don't take my word for it. Go and do it, try it out and use it in the live market. And I'll show you afterwards at this time, I'll show you some live charts from today. Yeah. So you're able to compare the analysis that we do and see it work in real time as a trading week unfolds. You get access to this weekly prep session recording every Sunday. You can learn by watching us analyze and prepare for the trading week. And these are the markets we cover. We cover Forex primarily, mostly the majors. We look at some cross currencies as well. We look at futures, we look at oil, gold, Bitcoin futures primarily, and the S&P 500, where we look at the E-minis primarily for that. We also cover long-term. We might point out trades that we had in oil that's already doing really, really well. Swing trades, medium term, and day trades that may be setting up immediately at the beginning of the week. You'll get my supply demand levels ahead of time, and these are based on years and years of trading in the market and understanding through experience where to put those levels and why. You'll get actionable trading ideas. Just taking one of those ideas will actually pay for the session and beyond if it plays out in your favor. You also get the current week and last week's recordings, and you can go back and review them as often as you like. Now, you can join now. The regular price on a monthly basis is $97. You can actually join for a whole year. The usual price is $997. Deadline is Monday, July the 23rd. I mean, take your time to think about it. For me, I mean, anyone else, it's a no-brainer, because at the moment you can get it 50% off. We're doing the launch price again. So you can get $50 off a month and lock in this price forevermore. Once you're into this price, you'll only pay this price, unless of course you cancel and come back in and the price is not available anymore. Or you can actually pay $500 less and only pay $497 for the whole year. Yeah, it's not a lot of money. And if you look at this, the person who came back to me from England told me he made £650 in 1 week trading based on that. He's already covered a whole year's subscription. So again, I'll show you how to actually sign up for it in 1 minute. Here's the link. Let me just see if I can put that link out for you. So you have to go to weekly preparation session. Let me see if I can, I'm going to do that from here. So let me actually put the link in the room. Let me see if I can post it to you 1 second. Here we go. So I'm posting the link in the chat area, so you can click on that, and I'll show you what you need to do. So when you click on this, you can click join now, and it will bring you to this page. Now, in order to get, it says $97 at the moment. So in order to get $50 off forever, as in less than half price, you need to type in launch. If you type in launch and click apply, see, it's now $47 a month. You can cancel at any time, okay? You don't have to, you can, if you don't want it, just cancel it. You may find that this may be what changes your whole trading around. I've had many people now go through this and report back to me how wonderful it is, how they're benefiting from it, and how it's helping them be profitable during the week. So again, you can get it from my website. You can click on weekly preparation session and it'll bring you to this. If you click on join now, it gives you the 2 options. And again, you're getting over 50% off of these. If you want a monthly, that's great. You can get it for $47 or $497. That's it. Yeah, $497. And this is it. You pay once when you sign in and you get immediate access to the session. So again, so the deadline, Monday, July the 23rd at midnight Eastern time, and you get, again, 50% off. So if you have any questions, then feel free to type them in the chat area now, and I'll see if I can answer your questions. And that's a question from Jim. I'm assuming that means how much should your stop be, account percentage? It depends. I would recommend not risking more than 1% per trade on any particular trade of your account size. Now, I risk on one of my accounts 0.25%. So if I have, say, 4 losing trades in a row, I'm only down 1%. It's nothing, yeah. But if you're risking 5%, that I hear some people recommend, I think that's a bit ludicrous. Then if you have 4 losing trades in a row, you're going to be down 20%. Now, to make your account back to 20%, that's more difficult than making 1%. And it will have a, it's a bigger part of your account size. So again, the bigger your account you have, the smaller percentage of that account you can trade, and you won't feel it if you have a losing trade. And that kind of tempers the emotions a bit. So if we have a couple of minutes at the end, then I'm happy to, so just click on, have you got the link? Just tell me yes if you've got the link. If you take the link and you can click it, you've got time, there's no rush. I only want people, again, I'm very fortunate that I have some of the best people in our trading room and in our sessions, and that people that I'm working with. I have the top people, literally the top people in the world. I have the executives from various different walks of life, top civil engineers. I have doctors, lawyers, people that entrepreneurs, people that run their own businesses, and people that are looking to kind of make a bit more income on the side, or maybe have the freedom that trading can give them. But again, it's not going to happen. It's not going to happen without you putting the work into it. And you need to learn from people who know what they're doing, not just from someone who puts fancy YouTube videos out on the internet. Is a good marketer, but probably not a trader. So again, thank you all for attending this session. And as I said before, we've got about, I think we've got about a few minutes. So what I can do now is jump into the charts. Who wants me to jump into the charts? We can have a quick look and we'll wrap up the session literally in about 3 minutes. So if you have any questions, you know, feel free to email me, simon@tradesmartforex.com. I think the email address is over here. Click on the link, check us out. Maybe, you know, your risk is $47. Come check out the session. If you enjoy it, you're welcome to stay. If you don't, then you can cancel. That's no problem. I have a YouTube channel as well that you're free to join, and you'll get put out an update on the dollar on a week-by-week basis, like a 3-minute video, and it's pretty accurate. It's been going for probably about 1.5 years and super accurate. You go and watch it and see what happens. Go and watch what I say and then go and compare it to what happens in the market on a week-by-week basis. You'll see it's pretty accurate. So let's have a quick look at the charts for a minute or so, and you can see basically what's happening. You know, we have supply and demand. For example, we take the pound now. Look where the pound's turning. So today we could have, yeah, we shorted here, London session in supply, and played it down to this level. From here, we could actually buy it. See, these are the levels drawn ahead of time. This level was drawn yesterday, and it didn't reach it till, well, it reached it yesterday. I wasn't trading then, but reached it today, and boom, there's your trade on the 1 hour chart, day trade. Yeah. Here's a trade that we took the other day as well. We had, if we took a bigger time frame trade, we actually shorted this up here. This is euro yen, and again shorted it right here. Stop was above where it actually had a run up like this and almost stopped as that. Again, I put my stop wide enough that that's not going to hit me. And once it comes back, I know for almost with a high degree of accuracy or certainty that this is going to go down. And I took my profit yesterday around this area before it bounced. So you can see this is, we discussed these levels that we have. I mean, look how accurate this is. Where did the market here? This was already ahead of time. Where did it turn this week? If we look at the almost any time frame, we can look at anything. Let's look at the euro. Again, you can see very similar thing today. This was a short trade today until we came down here, and if you understand how to read trend, you can see the trend actually changed on the smaller time frame around this area, and we had this kind of bursting move to the upside. So if you want to learn more about how to do this, how to find accurate trades and analyze the market, you know, we're more focused on learn how to read the market well, much like learning how to read music, and then you can develop any strategy that you want. If you're more strategy based, you're very limited.